Good morning and welcome to Killik & Co podcast for Friday the 31st of March. We'll start today looking at some macroeconomic news. Firstly, looking at the UK, there's not much out in the way of data this week, but obviously the one important point of news was the fact that Article 50 was formally triggered this week. Looking at the impact this has had on sterling, you can see by the chart that there's been a very muted impact, given it was mostly already in the price versus the dollar and versus the euro. Moving on to European macro, there this week we have seen some more dovish comments and news flow coming out of the ECB, trying to play down some of the more hawkish views that had developed after the last ECB meeting. And there seems to be a view now being expressed that there will be no change to the interest rate policy while quantitative easing is still being continued. There was also some better data coming out of Germany, with German CPI coming in lower than expected and significantly lower than last reading. So they came in at 1.6 versus expectations of 1.8% and 2.2% at the last reading. Moving on to the US, there we have seen some fairly good economic data coming out. Most notably, the US consumer confidence reading, which at over 125 is now the highest reading since December 2000. There was also revisions to GDP forecasts and better than expected pending home sales and the Richmond Fed Manufacturing Index. And all this has meant that it is making it more likely that we will see the further interest rate increases expected for this year. Moving on to some more stock level news this week. So only one of our covered companies reporting this week, and that was Wolseley. So there we've seen very strong share price performance, and this has been mostly driven by strong performance out of its US division, and that's continued in its most recent results now to the first half of 2017. Very strong performance, partly driven by currency, but also good underlying performance in the US, where local currency revenues were up 25%. And actually, if you look at what's happened in Wolseley's business sort of since 2011, you can see from this chart that trading profit that comes from the US has gone from around 53% up to 87% of trading profit now. And as a result, they are changing the name of the business to Ferguson, which is the name of their US subsidiary, and they're also changing their reporting currency to US dollars because it is effectively much more a US focused business now. Moving on to what's in the week ahead. Not much reporting in terms of the stocks that we cover. The only stock reporting is Walgreens Boots Alliance, and there we will be looking for any information regarding the proposed acquisition of Rite Aid, which is a smaller US competitor which has faced some regulatory issues, as well as any comments that the company makes around what's going on in US healthcare and wider consumer now following President Trump coming to power. Thanks very much. That's all for this week.